And developing economies across Asia have settled into a new growth path that will see the region expand between 6 and 7% a year. It's a pace much slower than that seen before the global financial crisis, but still represents solid growth. CCTV's Shraysi Tandon is live at the IMF in Washington with all the details. Shraysi.
That's right, Michelle. There are economies across Asia that are starting to slow down. However, many people are not too concerned because this is still the era of Asian-led consumption growth. Earlier today, I had an exclusive interview with World Bank Managing Director Sri Mulyani, who told me that growth of over 6% is still very good, and in fact, it is a luxury that some economies today can only dream of.
The immediate impact is certainly coming from their demand for import goods, and that has already hurt many countries. I mean, you can see that China is slowing down, Asia in general also slowing down, and the China slowing down is also have the impact for many of commodity prices, many countries who also supply. So we see that from the trade channel is the most direct one.
Indonesia's economy grew by 6.2% last year. It was amongst one of the best performers when we look at all the Asian economies. But the country still has a lot of problems. We know corruption is still rife, exports are weak, and recently it posted its first trade deficit in almost 50 years. As the former finance minister of Indonesia, what do you think policymakers in Indonesia can do today to really address all those problems?
It was designed by many developing countries in actually responding to the global financial crisis 2008-2009, which shift their policy by nurturing more domestic demand growth. And for Indonesia, with the size of population and economy, they can do that. So they are now relying more on the investment as well as the consumption. The problem with those policy strategies is actually if you are not putting enough effort and fast enough, you are going to easily overheating, because when you do the domestic demand driven growth, you should be matched by the supply side. So they are going to have a more or less harmonious both sides growth, which is not going to ignite price that then create inflation. That, I think, is going to be the challenge for Indonesia. The second one is, of course, you can see from the balance of payment, the current account, especially also the trade account. That's really mainly because in the past, and I think is even still currently, Indonesia still rely more on a natural resource export rather than the export which is driven by manufacturing and the derived sophisticated product. That is going to be the challenge.
The IMF warns that excessively loose monetary policy could potentially create a lot of credit bubbles around the world, even threatening to tip the world back into recession. What can emerging markets do to really keep the inflationary pressures low and prevent these bubbles from forming?
Monetary policy, all central banks try to use their the monetary quantity easing in order for them to create an environment for growth to be restored. But that's not going to be enough and adequate. Many countries have to do the real hard homework is actually on the structural side, whether this is on the labor side, whether this is on their policy, which is related to the quality of spending, infrastructure spending. So these are all need to be really pay adequate attention.
China's housing bubble is extremely alarming at the moment. In fact, many spectators worry that if this bubble bursts, it could have catastrophic effects around the world. Do you think China's housing bubble will potentially burst?
The response of the policy in China from the global financial crisis, in which the global economy is going down very sharply, by doing the expansionary policy both on the fiscal and monetary side. It was right in 2009-2010, and that's why they need to consolidate it, and they are now consolidating. It cannot reverse immediately all what you've done in the past 2-3 years. So we have to deal with the consequence now. So for China, definitely in this case, they knew that the consequence of expansionary policy to do the counter-cyclical is actually now appearing in this one specific sector, which is on the property. It creates a lot of complication because it linked to the local government revenue side. The local government is really rely on their selling land for the property in this case. as their source of revenue. It can also hit the vulnerability of the financial system, banking system. So for the policymaker there, really try to manage this bubble or correcting the price to the level which is perceived as the fair price rather than excessive price that then create a lot of complication. It will take time.
So as you can see there, Michelle, Sri Mulyani really iterating the fact that the ongoing debt crisis in the 17-nation Eurobloc is having an impact on the emerging economies, specifically when it comes to trade, and this is reflected in exports and imports and even in some of their current account figures. But overall, you know, these emerging economies are still growing really rapidly, and so the impact is being cushioned by the GDP growth that they're having. Many argue that a lot of these emerging economies are economic superpowers in their own right, and some of them, like China and Japan, even rival the United States when it comes to global economic and trade influence. Back to you, Michelle.